It is Stephen Williams, founder and president of the CreditRepairShop.com, and in this video, I'm going to talk about something that is hurting millions of Americans. It's underwater car loans. I'm going to explain what it means, just in case you don't know what it means. But this is something that is tearing through people's money. It is setting people up to have debt that they didn't even expect or didn't understand why they always have this debt, and it's affecting people across the board. It doesn't matter if you are middle class or low income, and it's because of the way that they're structuring these loans. Really, part of it has to do with people wanting to get a new car or a newer car, and with the greediness of the auto dealers and the lenders to just be able to make loans, because they don't make money unless people make loans, unless they get loans. Now, what I need you to do right now is like the video. Also, get notified when I put new videos up. You know I make good content. I talk about stuff in ways that people don't talk about it. So make sure you like the video. So now let's get started here. I ran across this article here, and it talked about this individual, this gentleman here. He's got a loan for a vehicle, and it cost him $27,000 for the car, but he's ending up with a $45,000 loan. And the reason why is because what's happened is, over time, where he's traded in a vehicle, the dealer, what they'll do is, they can only give you what they believe that they can sell the car for, plus less than that. So let's just say, for an example, you're coming in to trade in your vehicle. You owe $20,000 on it, but the car is only worth maybe $15,000, the Blue Book price on it, which is what they would buy it for at an auction. Well, they're not going to give you $15,000 for the car, because when they go to the auction, they usually, depending on the condition of the vehicle, they usually can't get what the Blue Book value of it is. So what they're going to do is they're going to back up even a little bit more than that. But let's just say that they gave you what the Blue Book price was for. That's for the smart people. That's for the people that say, hey, the Blue Book says this is what the wholesale value of my car is, so I want you to give me $15,000. So you're dealing with an honest dealership. Well, let's see how they're going to make money on the other side, even if they give it to you for what the Blue Book price says on the vehicle, for the wholesale price. And they'll have different things on that wholesale price. They'll say good condition, fair condition, or bad condition. So they're going to play that game with you. They're going to say you got some dents and stuff on the vehicle. Just no matter what, they're going to go under that $15,000. Let's just say that they give you the $15,000. You're still looking at a $5,000 where you have underwater. That's what they call it, underwater, where you're negative equity in the vehicle. And usually where I've seen this happen is where people have rolled over from another vehicle onto a newer vehicle that they got. Now, that brought up some bad memories, even for myself, back in the early 90s. I remember we had a Chevy Cavalier, my wife and I, and we had traded in that car. And when we traded it in on I think it was a Pontiac. I just remember the color. It was a white Pontiac. And it was gonna be like an upgraded, better car for us. But I remember it was negative. Like, they were saying that we owed more on the car than what they would give us on the trade-in. I bet, though, if I were to look back at that we maybe had gotten kind of scammed on that deal, because we had always made more on our payments than we did from than what it was required. That was like when we first started thinking about paying off stuff back then, when we started making money from our business. We always paid more than what was the minimum payment, and we did that on our cars. I remember some of the times we would get a payment schedule for our car, and it said we didn't owe any payment at that time for like 2 months from now, but we would still continue paying. So there's things that you gotta watch out for, because they'll play these games on you, because this is the way that they make more money. Now think about it, please follow me. And I'm going to use the example of what happened with us with the Cavalier. When I think back, and this was like in 92, what I think they had did to us is that they just said, this is what we can give you for the car, and we're going to have to roll over because you owe more on the car than it's worth. And, not being that financially smart at that time about contracts and stuff, we just went with what they did, what they said, because you always want the new car. That's what they play on. They play on that you want to get the new object, and that they're doing you a favor, even though it's your money that's going to pay for it. Real quick, like the video if you haven't liked it. Please like the video, because we need to get this information to more people. So what they did is they gave us the vehicle. I don't remember what it was for at that time. It was so long ago, but they came out there and they said, okay, this would be your new payments, but what we're going to do is we're going to roll over that debt onto the new vehicle that you're going to buy. And we were like, okay, is this just me and my wife? I can kind of vaguely remember that we just looked at each other and said, okay, because you're more focused on wanting to get the new vehicle. You want to get out of the old vehicle, get into the new vehicle. So they rolled it over, and it was like, when we started making payments on it, it was like, if you look at the Blue Book value of the car, as soon as we dropped off the lot, we were like more. It was like what we were deficient at that time underwater. When we left the lot, we were like double underwater. And this is what people are doing. Like when you look at the example of this guy here, where he's getting a new car for $27,000. You can tell it's a nice car. He wants to get it. He wants to drive around in a nice car, but he's probably rolled over loans several times to be coming out of there with a $45,000 loan when it's a $27,000 car. Now, this is where I think the scam is with the banks and the lenders and the car dealers, is that how are they going to give you a loan on a car that's worth $27,000 for a $45,000 loan? How do they even feel comfortable even doing that? Because if you were to straight up go into a bank with a car and it was $27,000, and you said, oh, by the way, I would like for you to just go ahead and give me $45,000 because I want to put the rest in my pocket, they're going to laugh you right out of there. But the relationships between the banks, these car dealers, the scams that they seem to be pulling on people, where they're like, just give them the money because it's coming through us. Technically, I don't even think that this loan would even be legal, because the amount of a car is considered a car loan is considered a collateralized loan. So they're actually giving you a loan for more than what the value is. So what is the collateral? They're depending on you or us, back then when I was getting car loans, that you would be the collateral, your job, your willingness to pay and to continue paying on the vehicle. So even for this gentleman, when he looks at his car, what it's worth, if he was to sell the car for what it's worth, he would still be owing the balance on that $45,000 minus the $27,000. So you can see that this is just a straight up trap that they put people in. And so what I tell people to watch out for, because they play this game with you. They'll come out there, and I remember this from back then, they'll come out there with these sheets and they'll be like, hey, if you put this amount down, this is going to be your payment. And they'll have these 4 squares. Like, this is like a straight up sales gimmick. They come out there because they know that the thing that consumers are focused on is, I want the new car. That's like number one. That's top of mind. Number 2 is the payment that I would have to pay to be in that car. So that's the next thing that they're worried about. It's like, okay, am I going to be able to afford to be in that car. Like, what is the lowest payment that I can get? Like, the focus isn't really on the $45,000, because what they make you do think is like, hey, we're doing you a favor. We're getting you into this new car. We're going to just roll that over on there. Now, this is why the dealers will do that, is because they're going to roll that over. And usually, if they came from, some people go back to the same dealer, they're going to be getting the money on that for making that new loan for $45,000. They get points on that. So let's just say that the interest rate, and this is going to be a high, what's considered a subprime type loan. They're going to get like 7 or 8% for when they bring that loan to a person. They do what's called, they sell that loan. When they bring it to them, it's considered like they sold a loan to the bank. And so they're going to get a percentage for selling it. So let me back up real quick. Please like this video if you haven't liked it. Share it, subscribe to my channel. But real quick, this is what they do. So they bring the loan to the dealer. I mean, to the banks. The banks, all of them line up. That's why if you ever filled out an application at a bank, at a car dealer, they shop it to all of these different lenders. And they're doing, all of those lenders are saying, hey, we'll give you this amount if you push the loan to come through us. Or they're all jockeying to pay the car dealer money just for bringing a loan. So this $27,000 for the car, they've probably bought this car for $15,000 at an auction, bump it up to $27,000, and just for doing a loan, they can make anywhere between $1,500 to $3,000 just for doing a loan. And then we're not even talking about all of the extras that they stack on top of that. So you can see how this is very lucrative to them. They don't care that they're putting people into a situation. They just want to stack up a whole bunch of stuff. So now, when I was looking at that on a recent vehicle that I bought for my wife, Range Rover Autobiography, we bought it. It was a 2-year-old car at that time, because we never buy any car new, because you're going to lose value as soon as you drive it off the lot. What we did is I went back on there, and what I always do is I make them give us a sheet that breaks down all of the fees, all of the taxes, everything, before we give them a check for the car. And what I want you to do when you look at stuff is, don't let them bring you everything with the financed price or anything like that if you're going to finance it, or if you're going to pay cash for the vehicle. Just have them give you a sales sheet that's going to break down what they're selling you the car for, any documentary fees that you got to pay, any tax, what's going to be taxed, the sales tax, license and registration, if you're going to get an extended warranty, what they're going to charge for the extended warranty. And yes, they do make money when they sell those extended warranties. If you're any types of stuff that you're going to be paying, you need to get the prices on those. And then, so you have a total cash sale price. That's what I made them do. What is the total price paying cash for the vehicle? What is the total price for everything that's going to be in there? And so they gave us that price. And for that vehicle that I'm looking at the contract right here, for that vehicle, it was $95,361.63 for everything on there. So you know the total price. So they're not able to do any gimmicks or anything. So if you pay cash for it, that's what I'm paid. Or if someone was to get financing, you would know what you're going to get paid, what you're going to have to pay. But what they try to do to you is they try to get you not focused on that bottom line price. Is what they try to do is they try to bring you in, and they use this square sheet where they're going to put 4 different payments on there. They're going to tell you 4 different amounts that you put down. But what they are hiding from you is they're hiding the interest rate. Some of them might disclose it, but they usually try to disclose that when you're signing the paperwork. And that's why they'll do this in one room, and then they'll take you into the finance person in another room to sign all of the documents. And that's when the interest rate would be disclosed to you. but you've already chosen which payment you want. So you have to be very careful when you choose the payment. If you're doing a payment, finance the vehicle, you need to ask them at that point, what is the interest rate with all of these? Make them disclose that for you, because they'll try to hide that from you. Real quick, please like the video. Please like the video and hit the notification button so you can be notified. And if you find yourself in a situation like this, post your comments below, because I'm going to help you get out of this type of situation, because there's ways that you can potentially get out of it because of the way that they did not disclose everything to you for the loan. Okay, now moving forward, so that's what you need to do, is you need to make sure when they come out there with their little gimmick with the 4 squares, you need to ask them what's the interest rate. You need to, even before that, you need to get a total sales sheet so you can know what you're paying. And then you want to know whatever you end up paying, whatever one you end up choosing for payments and the down payment and everything, what is the bottom line price of what I'm going to be owing after that. And then you can make a decision. I believe that if you do that, you're going to probably choose to just stay in the vehicle that you're in, because what had ended up happening with me and my wife was that we decided to not do any, go get vehicles this way anymore. We ended up paying off our vehicles, keeping our cars, and just driving them longer than regular. We didn't trade them in, do any of that stuff. And then eventually we started paying cash for cars. I understand that everyone is not in that position, but even with that, it's better to just take care of your vehicle, take care of the maintenance on them, and keep them as long as possible. I have a vehicle right now that's a 2010 Range Rover that I drive back and forth to work. I still have that car, don't owe any money on it. I just do very good maintenance on it. And I have a Mercedes-Benz, I don't know if you've seen it in my picture, that's a 2007. I still drive that vehicle, don't owe anything on it, and just do very good maintenance on it. So there's nothing wrong with keeping a vehicle for a long period of time. You save a lot of money by not having payments. So what's happening, I'm going to click over to another part of the article, or another article that was on the same thing, and they talked about some stuff here that caught my attention. They said that right now, 33% of the people that trade in cars buy new ones, and in 2019, 33% of them had negative equity compared to with 5 years ago, 28%. That means that it's growing. That means that when they trade in their vehicle, they're owing an average of $5,000 more. So they're throwing that on top of another vehicle. So just think, if you start out that way with a vehicle and then you trade it in 2 years later, you're not going to have paid this $5,000 off. And what ends up happening is that new vehicle that you have purchased depreciated, and then you end up owing another $5,000. That's how that gentleman ended up owing more on that vehicle. Let's see what he was at. Let's bring out the calculator here. So they're saying that he had bought a vehicle $27,000, so $45,000 minus $27,000, so $18,000. I'm pretty sure he got into that position from doing that several times. And let's see here. Mostly subprime type banks are the ones that end up doing that. So here was one here, had a lady, she bought a used 2011 Chevy Traverse. Loan was $25,000. Number one, the 2011 Chevy Traverse should not be for $25,000. We already know that that's a problem. This is the company that they had. I'm not going to mention it because they'll probably slam the video. But I can tell you that almost all of the people with the credit repair shop that we've had to help with auto loans, I would say 90% is with this company. They do a lot of bad subprime auto loans that they specialize in. it said here that the loan included a nearly $2,200 balance she owed on another vehicle that she traded in. And what you have to think about is that if you you're going to be paying. So if you put this $2,200 balance onto a new vehicle, it's not just $2,200. It's going to be interest is going to be placed on this. So when you're paying your new loan, it's going to start accruing interest on this plus the new balance right here. So if it was if it was just 23,000 before that, or if it's 25,000 plus the $2,200, the interest is going to start accruing on this amount. So what happens is that you think that you're getting a loan for one amount, but you're actually paying interest all over again on the amount that they put onto the new vehicle. Now, and this is the thing that always usually happens. You know, something happens with the vehicle. It broke. She even had it broke. Well, they said that the Chevy broke down in 2017 shortly after. Couldn't afford the repairs, and it said that they did a faulty installation with when they did the oil change. So they repossessed the vehicle, resold it. Look at that. They resold it for $2,400, and then they came back after her for $27,000. What did I just tell you? That this company, we run into this a lot with this company, a lot. So you can see what happened. They took it to auction, and they were only able to sell the vehicle for $2,400. Even if the vehicle was working, everything was good with the vehicle, they still were not going to get $27,000 for that at auction. So we already know that this is a scam. So why were they willing for a vehicle, even if it was broke down? Why were they willing to loan that amount on the vehicle? So this is already just showing that this is just a setup. Real quick, please like the video. Please like the video because it helps with the algorithm. It's going to help us find more people to get this help to people that are in trouble with this, or to avoid getting into trouble with these types of loans. So let's see here. 5.2% of outstanding subprime auto loan balances were at least 60 days past due on rolling 12-month average during the balance ending in June, up 4.8%. Yeah, they're saying that right now that a whole bunch of people are behind at least, well, they said 60 days. I've seen one that shows 60 to 90 days past due on their auto loan. So we get a lot of customers that say that they're running into this problem here. So what I would like for people to do is post your comments. If you are upside down on a loan, even if you're making the payments, you need to review your contract to make sure that everything was disclosed to you, because there's certain laws that they could have broken where they didn't disclose to you, or you look at your contract and it was not what was told to you in the room before you did the finance. And I know you maybe had signed on the dotted line, but there's still maybe some things that you can do. Also, if you find yourself where vehicle was repossessed, because these are subprime loans, when you look at the contract, they maybe had stuck some type of rider insurance on the contract that states that if the car is repossessed, that an insurance would pay the deficiency of the vehicle. We have ran into that. When I first started the credit repair shop, there was an old lady, I don't remember her name, but she was one of my first clients. and her husband had gotten a loan for a Cadillac, and he had passed away. They came after her for the money. She was just working as a security guard. I mean, this lady was 60-some years old, and she was just a security guard, trying to just be able to survive. She was getting some Social Security, but it was just so she was able to survive. And when we looked at the contract, and this company that we just talked about, that we just showed, this was the company that we were going back and forth with for her. But we had found out that some of the loan was paid, not all of it, but a percentage of it was paid. They were coming after her for about $30-some thousand. It ended up being where it was only like about $4,000 or $5,000 that they ended up coming after her for, after we saw that a large percentage was paid off on the vehicle from a rider insurance that was placed on there, because they knew that they were giving a loan to a person that was in their 60s, and that at any time something could happen. So they had the lender had an insurance, either the lender or the car dealer had them pay for an insurance that would pay if something had happened to him. And so they paid that, but it was still deficient of about $4,000 or $5,000. We ended up doing a settlement on that for about $2,200, and she was able to pay the payments on that, and everything went away after that. But just think, at first when she came to us, they wanted all of that money, and no one would look at the contract and make sure that there was no insurances and stuff on there. Actually, I didn't expect there to be insurance on there, but it was just something that we just wanted to look at the original contract, and we found that there was an insurance rider on there. So please like the video. Please post your comments. Even if you're not in this situation, please post your comments just discussing what you think about what the lenders are doing to even loan on this. They're always talking about you don't have enough collateral to get a loan, and look at what they're doing. They're giving more collateral than what a vehicle is worth. No matter what, that vehicle is never going to end up being worth $45,000. I can understand if this was a house, the house is going to appreciate, but a vehicle is not going to appreciate. It's only going to depreciate. So post your comments just to what you think about them giving loans on that, even if you're not in that situation. If you need help with your credit, please visit our website, thecreditrepairshop.com. If you need your credit reports and scores, please use the link below, your3scores.com. The number 3 scores.com. Please like the video. Please share it. Please subscribe to this channel. Please comment again. And then also something that I want to we'll get to everyone. If you're sending your information to our email, which is support@thecreditrepairshop.com, you got to disclose to them that you're not a customer. Please say that you're sending me information to review, that you're a YouTube subscriber. And you need to say that you're a YouTube subscriber. You must subscribe to the channel, and I will review anything that you send me. And some of the times when I email back, it might go into your spam box, so look at that. But I've responded to several people that have sent information from court summons. I've responded to several people about collections and auto loans and stuff like that. And but you got to make sure that you say that you're a YouTube subscriber, because if I don't want, they can't, my employees are not allowed to work on anything except for stuff that people are customers. That they need to pass that information over to me if it's just to answer a question because you're a YouTube subscriber and you have a question, or you're sending documents for me to review as a YouTube subscriber. Then you need to put that in the subject line, YouTube subscriber has a question for Steve, and then they'll get that over to my email to where I'll answer that. And when I answer it, you have to if you haven't gotten it over a few days, check your spam box or your bulk email box just to see, because it might go into there. Some of the times it could go into there. All right. Thanks a lot for your time. This is Stephen Williams, founder and president of the CreditRepairShop.com. Thank you.